Inflation, I should say, swindles the bond investor too, and it swindles the person who keeps their cash under their mattress. It swindles almost everybody.
Warren Buffett is arguably the world's greatest investor. With a net worth of around $100 billion, he clearly knows a thing or two about making money. Now, currently we find ourselves in a time of high inflation. In the US, inflation now sits at 9.1%, a 40-year high, and in Turkey, inflation is a huge 80%. Inflation is like a stealth tax that erodes the purchasing power of our hard-earned money. So the question of this video is, where is the best place to put our money during times of inflation, but to not just protect the purchasing power, but also make money? And we'll be listening to the sage advice of Warren Buffett and going over all the different investments that we can choose from, including stocks, bonds, real estate, gold, cash, and crypto. As always, if you do enjoy anything in the video, then drop a like, and a big thank you to everyone who does. And so, in reverse order, from worst place to best place, according to Warren Buffett, here it is.
I shouldn't answer any questions on the subject, but I will. There's all kinds of people watching this that are long Bitcoin, and there's nobody that's short, and nobody wants their windpipe stepped on. I don't blame them. I don't like people who step on my windpipe. I would say this: if the people in this room owned all of the farmland in the United States, and you offered me a 1% interest in it, it's just bargain price, $25 billion. I'll write you a check this afternoon. $25 billion. Now I own 1% of the farmland. If you tell me you own 1% of the apartment houses in the United States, and you offer a 1% interest, so I'll have a 1% in all the apartment houses in the country, and you want another $25 billion or something, I'll write you a check. It's very simple. Now, if you told me you owned all of the Bitcoin in the world, and you offered it to me for $25, I wouldn't take it, because what would I do with it? I have to sell it back to you one way or another. I mean, maybe I have the same people, but it isn't going to do anything. The apartments are going to produce rental, and the farms are going to produce food. And if I've got all the Bitcoin, I'm back where whatever his name was, who may or may not have existed, was 15 years ago. If I got it all, he could create a mystery about it. But everybody knows what I'm like. I mean, so if I'm trying to get rid of it, people will say, well, why should I buy some Bitcoin from you? I mean, why don't you call it Buffett coin? Make your own or something. Do something. But I'm not going to give you anything for it. And you'd be right, incidentally. But that explains the difference between productive assets and something that depends on the next guy paying you more than the last guy got now.
So clearly not a fan of Bitcoin or crypto. And I think the main point, similar to commodities, is that Bitcoin doesn't actually do anything. It relies on someone else paying you more than what you paid for it at a later date. And so a recurring principle in this video is that Warren Buffett's favorite investments are ones that actually produce something. And so next up, we have gold. Gold is the 5,000-year-old investment that is said to be an excellent place to protect investors from inflation. However, Warren Buffett says,
gold would be way down on my list as a store of value. I mean, I would much prefer owning 100 acres of land near here in Nebraska, or an apartment house, or an index fund. Gold, we'll say, was freed up 30 odd years ago, but it adjusted to a market that still, if you go back to 1900, we were talking $20 gold. Well, you take 20 to 400 in 100 years. The Dow went from 60 to 12 or 13,000, and then 12,000 or whatever it might have been in that same period, and paid you dividends during the time you owned it. It was 66, I think, at the start of the century, and I forget what it ended, but it's 11 or 12,000. And like I say, it was paying you something every quarter during that period. And if you own gold, you pay $20 in 1900 or thereabouts, and then we'll say you had $400 100 years later. And in the meantime, you paid insurance and perhaps some storage cost. It really is it's not a store of value. And I'm not arguing for paper money, but if you're worried about paper money, and I think, makes a lot of sense to worry about paper money over long periods of time, but it's just about, it's just about the last thing I would want to own under those circumstances.
And so gold too is not an investment liked by Warren Buffett. In another interview, he explained that any investment can outperform another during a 5-year time horizon, but once you pass 10 years, there are better investments that will nearly always outperform gold. And then once you include the additional costs, like having to insure your gold and store your gold, it pulls the return on investment down even further. So you won't be seeing Warren Buffett loading up on gold anytime soon. Next up, we have cold, hard cash. Now, it's said that during a recession, cash is king. So surely Mr. Buffett is sitting on a mountain of cash, right? Well, when we look at Warren Buffett's portfolio, he owns a grand total of 0 cash. So I think it's safe to say that Warren Buffett is not a fan of cash. Now, next up, we have real estate.
The alternative, in my view, I mean, certainly commodities can be an alternative, but the alternative is income-producing assets of one sort or another that are not fixed dollar type. That might very well extend to rental real estate. It might extend to farms. I mean, an investment, you're looking for something where you put out money now, and that asset that you buy gives you back more money over time. Now, the problem with commodities is that you're betting on what somebody else will pay for them in 6 months. The commodity itself isn't going to do anything for you. So there's two types of assets to buy. One is where the asset itself delivers a return to you, such as rental property, stocks, a farm. And then there's assets that you buy where you hope somebody else pays you more later on, but the asset itself doesn't produce anything. And those are two different games. I regard the second game as speculation. Now, there's nothing immoral or illegal or fattening about speculation, but it is an entirely different game to buy a lump of something and hope that somebody else pays you more for that lump 2 years from now than it is to buy something that you expect to produce income for you over time. I bought a farm 30 years ago, not far from here. I've never had a quote on it since. What I do is I look at what it produces every year, and it produces a very satisfactory amount relative to what I paid for it.
So now we move on to the investments that Warren Buffett does like. And Mr. B is a fan of real estate, as you own an asset that also actually produces something. And he mentioned that he did invest in a farm, which every year keeps producing. However, real estate is still not where Warren Buffett puts the vast majority of his money. There is a creme de la creme investment that Warren Buffett loves, which we'll look at in a second. But next we have bonds, and we need to make the distinction between short-term and long-term bonds.
I don't like fixed dollar investments at all. I don't like short-term bonds. I don't like long-term bonds. We own a lot of short-term bonds, but that is not because we like them. That's just a parking place. But
The one thing we know is we think that long-term bonds are a terrible investment, and we, at current rates or anything close to current rates, so basically all of our money that is waiting to be placed is in Treasury bills that I think have an average maturity of 4 months or something like that at most.
So he's also not a fan of bonds, and that's either short-term or long-term. However, the reason bonds are so far up on this list is because he does keep a huge amount of money in bonds. More precisely, short-term government bonds, to the tune of $72 billion. And he mentions it's not because he likes them, it's because the alternative would be keeping all that money in cash. And why not make 0.25% instead of 0? And so this brings us on to the final asset class, and it's also where Warren Buffett keeps the vast majority of his money during times of inflation. And so why are stocks the #1 choice for Warren Buffett? Well, the average return of just a simple index fund that tracks the market is 10% per year, which is still higher than inflation right now, and remember, it's at a 40-year high. Also, Warren Buffett is well known for being able to generate returns of 20% per year. And so he's been getting rich in times of inflation as well. And remember, he also loves investments that produce. And so he also benefits from hundreds of millions of dollars paid to him every single year through dividends. So there you are, guys. You now know Warren Buffett's thoughts on each of the major asset classes and how he keeps getting rich during times of inflation. And just to say, if you did enjoy anything in the video, then drop a like, and a big thank you to everyone who does. But for now, I'll see you in the next video.